Welcome to Bitcoin to Listen. News and strategies delivered straight, without noise, without promises, and without ads. Today is October 17th, 2025. Bitcoin is trading around $104,000 after another sharp drop that caught many investors by surprise. The main reason is the growing trade tension between the United States and China, after the US government announced new tariffs on technology products. This move increased risk aversion and pushed many investors to reduce exposure to volatile assets, including cryptocurrencies. The market, which had already been moving sideways for weeks, reacted quickly. Large liquidations in derivatives accelerated the downward movement, pushing prices even lower. Still, the general mood is one of caution rather than full panic. In recent days, Bitcoin has fluctuated between $100,000 and $110,000, while the fear and greed index remains deep in the fear zone. Altcoins like Ethereum and Solana also fell, following the broader retracement. Behind this instability lies an important factor. The US Federal Reserve is signaling the end of its quantitative tightening, the policy that has been draining liquidity from the economy. This doesn't yet mean new stimulus, but it's the first sign that the cycle of high interest rates may be nearing its end. When the Fed injects liquidity, risk assets tend to rise. When it tightens, money disappears and markets suffer. We are right in the middle of that transition, the most unstable moment, when any piece of news can trigger strong moves up or down. At the same time, the United States confirmed the largest Bitcoin seizure in history, about $14 billion, linked to an international fraud and money laundering scheme. The government has not yet decided what to do with the coins, but there's a possibility that part of this amount will be added to the US Strategic Bitcoin Reserve, which would make the United States one of the largest institutional holders in the world. You saw the sharp drop and might be feeling worried right now. The important thing is not to react out of fear. Markets move in cycles and emotions, and those who understand this learn to use fear as an ally. This is the time to observe, study, and prepare for the next move. For the average investor, the situation may seem confusing, but there's a pattern. Historically, moments of fear often come right before major rallies. Each Bitcoin cycle has three phases: fear, euphoria, and the silence in between. It's during that silence, when uncertainty dominates, that the best positions are built. So the key now is to stay calm, understand the global context, follow the Fed's decisions, and respect your own plan. Those who avoid panic are usually the ones who benefit the most when the cycle turns. This was Bitcoin to Listen. Clear news, no noise, for people who prefer to think before they act. Remember, this content is for educational purposes only. Every decision should be based on your own research and risk tolerance. See you in the next episode.